chore. So this is about as easy as that. It's 15 minutes per day. I'm going to call this the Greystone Daily Chore Strategy. And there you go. You can now have it. You can now do as many chores as I do. All right. So the Greystone Daily Grind. Does it matter what time each day? Think about that, Gavin. Okay, each one of these candles is a day, so it's going to depend what time the market closes in your country. Here it's 10 o'clock at night. Okay, so whenever the market closes and the new candle starts to be printed is when you want to be doing it. You want to be ahead of the game, right? So you want about 5-10 minutes before to look at all the setups, look at how the candles are behaving, know which ones are not going to be, not going to be valid, the ones that aren't near the EMAs, for instance, and then the ones that are, look at those. How long will the recordings be up for? I believe the recordings will be up to about Sunday night. That's normally when we have them out. So anyone that's signed up for the recordings will get that notification. I'll also remind people who are members of my newsletter that the recordings are available. You'd still have to go and register to get them and all that. So is it okay to use this in the 1 hour time frame? No. No. Do we... Okay, so that kind of brings me on to the next bit. All right, so pens at the ready. We're going to really chop through this now because we've got a very special guest coming on soon. He's going to do a presentation as well. Everyone ready? I'm going to fly through this. I've been talking for nearly 2 hours. Like I can't. I need to start wrapping it up, and then after Mike, I'll come back on as well. But we all got coffee, we all got drinks, we all got tea, we all got Red Bull, Darren. Whiskey, Daryl. All right. Darren doesn't buy Red Bull cans, he just has a drip. All right, so we're gonna get stuck in, right? So we gave you loads of examples before the break, went through all of these kind of entries. We realized that even conservatively, taking into account losses when we didn't even know there were losses and missed trades, 4% in the last couple of months on this particular pair, which is this is the last couple of months as well. So it's not like I've scrolled back. I just screenshotted the most recent chart. Now, what I want you to do is remind you about the plan that we've been building. Okay, so this is the plan. I want to read these through, okay, just to embed it in your skulls. So when we're looking for a sell signal, this is how detailed, right? Step 1, identify a bearish pin bar that just closed. Okay, so because the reason it's in this order now, we're doing it in this order as rules of engagement setups. Remember that. So it's not IPDE. These are the rules. So you've got to think in terms of what's actually happening. And when you look at the charts, you're looking at the close of the candle. You're looking at the candle and it's going to close, and then you'll start to weigh up the rules and whether or not it's valid, because you have to wait for the candle to close to get the signal. Does that make sense? So you can't do anything until you've done that. That's the first thing. So the pin bar must have closed with the open and close in the bottom 50% of the bar, plus either the open or the close needs to be in the bottom third. Okay? The new daily candle must have opened, so we're at the beginning of the very new day, or the very beginning of the new day. Okay, step 2, uptrend. 8 EMA must be below the 20. 20 must be below the 50, but that's typically the way it goes. Okay, pretty straightforward. 8 needs to be below the 20 for a downtrend. Step 3. The high of the pin bar, okay, the high of the pin bar must be touching the 8 EMA or higher. Place a sell stop order below the low of the bearish pin bar. And then a stop order 1 pip below the low of the bearish pin bar and a stop loss above 1 pip above the high. Okay, and then a 1-to-1 risk reward. Step 3, leave it alone. So this is where everyone's going, does it work on the hourly? Does it work on this? Does it work on that? What about if you did this? What about if you did that? What about the lower 50%? Leave it. Don't move it. Don't adjust it. Don't move the target. Don't move the stop. And then lastly, the order is valid for 1 day. Okay. What about the 1 minute? So after the next day is closed and you don't get triggered in, close it off. And you can do that manually automatically. Same in the other direction. Okay. So buy signal, identify a bullish pin bar that just closed. Has to be in the top 50% and the top third. 8 EMA must be above the 20. Must be touching or lower. Stop orders, buy orders, leave it alone. Now, just to kind of reiterate this, you will be tempted to change it. Look, I've even preempted this because we know how traders behave so much that I wrote all this before you even started asking these questions. You will be tempted to change it. Don't. You will be tempted to move your stop. Don't. You will be frustrated when it takes a couple of losses. Don't be. Accept it has to happen. The cost of doing business. You will be elated and want to increase risk in good times. Don't. This system has worked for me and this, I haven't been trading it this long, but I've done tested results this long, back from the early 2000s. It is very simple and effective, so stick to it. Now, lastly, I'm going to say that you have to go and test this. Okay? And why do we have to test it ourselves? I'd like to see some of the answers here. Correct. Psychology, confirmation, trust, belief, develop belief and determine expectancy, believe that it works, trust, confirmation, psychology. There you go. Exactly. Exactly. So you have been listening. Okay, so that just leaves some live examples. So what I did in the break is I pulled up the charts that I said I'd pull up, what, Euro, Pound and New Zealand dollar. Okay, so I've got the Euro, Pound, New Zealand dollar. All I need to do is kind of close this thing. So let's just... let's close this. Whoops. Discard the annotations. And bring on the dollar yen. And I'm just going to... This is the most recent chart. Okay, so just the most recent chart. This is today. And we're just going to go back over the most... I'm not interested in scrolling back loads and loads of charts, but I'm going to kind of just go through some examples live with you guys. And I'm much more at home now because I can draw like Bob Ross on NinjaTrader. So, first example here is a what? Have we got the moving averages in the right place? I'm just going to get you guys to answer all this stuff now. And I've put examples on trick questions as well, so you know you might be caught out here. 8, 20, 50, we're looking for a bearish setup. Yes, what does a bearish pin bar have to do? Come on. What does a signal for a bearish has to touch the 8 EMA or be above it? The open and the close have to be in the lower 50%, and the open or the close have to be in the lower third or the 30%. Okay, now the reason I say third or 30% is because I know a few people that trade this strategy, and some people do the third, some people do the 30%. If you want to set out a Fibonacci, it will be 33.3333 percent would be the lower third. Okay, if you just want 30%, then it's easier to set up on the Fibonacci. So I'm going to say that that's the only rule that you can go and change, because it's you know, it's 3%. And I know people who trade this different ways, so either 30 or 33. So that's the only rule I'm going to let you change. But we've got a signal right here. Orders go in, 1 pip below the low, stop loss 1 pip above the high. We get triggered in the next day. We take a 1-to-1 and we're out. Okay, that is one. Oh God. That is going to be 1%. Oh, my typing skills ain't as good. We then push down. Okay, the next signal that we get is here. Okay, is this a valid signal? Yes. It's this red one here. But does it get triggered? No. So we close that off the following day, but the following day is another signal, which is valid. Are you sure about homeschooling? The following day, we get another signal, which is valid. Okay? So entries go in, stops go in, we take a 1-to-1. And because we're already in the trade, this one here we can't take. Make sense? So we're going to close this one off. And we're going to say this was 1%. All right. Now you can see how easy this will be to test. However, you have to make sure you've got the rules right. Look how many people got it wrong. Even though it's so simple, they still got it wrong. If you get it wrong and you think it's easy and you fly away and test it, you're going to get the wrong results. You will get the wrong results. Watch it and watch it and watch it until you're 100% sure, then go and test it. Otherwise, you're going to waste your life. You're going to end up crying. All right. Now, I missed out deliberately missed one out here. There is another signal here. Entries, stops, targets. It's another 1%. Okay, we then push down. Push back up. We get another one here. Valid signal. Again, we don't know what order this happened, but let's just say we got stopped out. Okay, let's just take a loss. I want to go conservative. So -1. Okay, you're getting the hang of this now, right? We then pull back. Now, what happens here? What happens here? Hold. Good. Good. When do we start looking for trades again? Well, let me tell you, right? You actually start looking for trades here until here. Okay? Right in here, because that's the right order. And then back, you stop looking for trades here and you start looking here again. Make sense? And you actually had a signal here and you didn't get triggered. So that is 1, 2, 3, minus 1, 2%. 2% on the dollar yen, 4% on the pound dollar. So that's 4, 5, 6% on those two pairs over the last few months. And then we're going to look at the euro pound. Euro pound, I've gone back until June. Okay, so December till June. And we're going to look at, the only reason I scrolled back on this one is because I want to show you an uptrend, so a little bit of a difference. So we start to look again. So let's just kind of zoom in a little bit. Right, the moving averages cross here. Moving averages cross here. And at this point here, we're in the right order. The 8 has to be above the 20 has to be above the 50, price action trades above. All right, everyone with me so far? Good? Bullish example. Okay. Now, what must the signal look like? What must the signal look like in this example? It must touch the 8 EMA or be below it. The open and close must be in the what percent? Upper 50%, and the open or the close must be in the top 30%, right? So let's just start looking. Okay, so we're looking every day, no. Day, no. Next day, no. Go on and on and on, and bloop. See it? Everyone spot it? Okay, entries go in, stops go in. Now, do we hit targets? No, this is a loser. This is a loser. So minus 1%. See, we take losses. Okay, we then rally up. Bang, 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 bang. We pull back down to the EMA. Don't have any signals in here. Don't have any signals in here. And then this one here. Is this valid? Who said you missed one? Yes, we actually missed one here as well. Okay, so there's one here. Entries, stops, 1-to-1, 1%. So we got our money back. Okay, we then get another one here where we get entries, stops, 1-to-1. Okay, so we get another 1% there. Okay, we then rally off, we pull back, we don't get another one. This red one here doesn't touch. A 1-to-1 as an example. Okay, so let's just say we've calculated where our entry is and we've calculated where our stop is. Okay. What you want to do is you want to measure that, and there's an easy way to do that if you're using Ninja, because you just use the measure tool, and there you have it. So very, very simple on NinjaTrader. You just use or you can use the clone tool, or you can just do it in price. You can calculate it in price. Okay, so pulling back. Let's just carry on, do a few more. Back. Don't get one here. We get one right here. Don't know if we cross there though. Have to zoom in. I think let's just say we don't cross. Okay, so the order goes in. Depending on how this candle plays out will depend whether or not this was a winner or a loser. Okay, because we might have been triggered into the trade and hit targets. We may not. I'm not going to go back down the time frames to see. So we'll just say this was a loser. Let's just say it was a loser. Okay, so I'm going to be really, really, unfair on this strategy. So I want to give you low expectations. All right, we carry on. And doesn't look like there is another opportunity here. So 1, 2, So this is basically a 0% win. All right. So just pick two. I just picked two markets. Didn't plan anything. I just wanted to give you some examples of a bearish and bullish and make sure you understand the rules. Understand there's going to be losing trades. Understand every losing trade is going to be 1% of your account if that's how you're calculating it. But hopefully you understand this strategy. Hopefully you got value from just learning what was behind it, really. Strategy development. That was the key lesson here. How they're developed and why. And it's about picking out the psychological moves that happen frequently in the market, building rules around them so we can capitalize on them by trading them consistently with absolute discipline. And that is trading in a box. And the reason we do it consistently and the reason we trade these psychological patterns in a way that allows us to profit shouldn't be questioned as in, why does it happen? You know, what if we did this? What if we did that? We don't care. Like, we really don't care. And when I go back to the beginning of this presentation, I don't care about the fundamentals. I don't care about whether it works on the hourly. We're building it around our lifestyle. And we don't question why it works. We just know it works. And as long as we're keeping track of it and we're journaling every trade, we're going to keep a hold on it to make sure it doesn't start underperforming. If it does, and it goes well outside our max, say for instance, the most we lost in a row was 7 trades. Well, let's just say we take 8 losing trades. At that point, we can look back and go, well, something's not quite right here. I'm going to stop this and I'm going to reevaluate what I'm doing. See if maybe I need a bit more breathing room on the stop loss order. Right? Maybe the rallies are longer now. Maybe I could take a bit more of a one-to-one, but you don't have to do that until it starts deteriorating. And edges do deteriorate over time. That's why you have to constantly work on your trading. Okay, they will deteriorate over time. Don't let that be like a thing where people say, oh, yeah, this will work forever. Your edge, you have to constantly work on your trading. Okay, so journaling your trades just means logging every trade that you take. And that means we've done plenty of money management classes in these workshops before. Probably won't be able to get into that this week, but it's essentially it becomes your new back testing. It's a way of journaling where you got in, where you got out, what the prediction was, where your orders were executed. So did you get stopped out? Did you hit targets? It provides you with what your maximum drawdown was, what your maximum win is, what your maximum loss is, your strike rate, and it's just a way of analyzing the trades that you've taken. Maybe you made a mistake, and you want to note that down in the journal as a mistake and why you made the mistake, so that you can get better and better as time goes on. And that discretion that I was talking about earlier becomes second nature. You know, there's no way. That's why we always talk about Kaizen philosophies and continuous improvement. And you know, if you're applying continuous improvement to your trading, you can't go far wrong. And journaling is the best way to do that in terms of your actual trade execution. This strategy should have room for mistakes because it's not difficult if you follow the rules. That's what everyone says. Honestly, everything that we've said this week, everything I've been over this week, I don't say for my health, like, and I don't say lightly. When I say that traders make this mistake or that mistake, they, like, loads of them do. And as I said before, you can give someone the most profitable strategy on the planet and they will lose money trading it. Because it's not the strategy. How many people in here think that they could trade this strategy? Probably 90-something%. Maybe 100%. How many think that they could trade it? Probably 100%. The reality is, if I asked you if I asked you how many people think that they could trade it profitably, you'd probably still say 100%. How many will trade it profitably? Probably about, and this is going to shock you, about 15%, and that is really being generous. Tier 1 community, they have a higher strike rate because they're just a different kettle of fish. But most traders out there, most people are learning to trade. Nah. No way. 10%, 5%. So why is it so low? Why do you think that is so low? If it's so easy, anyone can do it. Everyone's 100% sure they can do this. Why do you think that is low? Break the rules? Okay, here's another question. Why do you think they've got lack of discipline and fear and greed? We spoke about fear and greed. Fear and greed is a mirror into the future based on something that's happened in the past. Not testing. Yeah. You can tell with the tier 1 people are, look, Aussie, not testing. Yeah. All you've got to do is run this for a test. How long do you think a test will take? 10, 20 hours per pair? It's nothing. Honestly, it's a drop in the ocean as to what that could provide you going forward. The mental stability of going into the market with confidence and going, I've got black and white results here telling me exactly how this should perform. All right.